This is the Allstarcharts podcast with JC Peretz. Hey guys, today is a special day. For the first time ever, JC is dedicating an entire podcast episode to a conversation about Bitcoin and cryptocurrencies. JC is a founding investor in OSPREY Funds, so we sat down with their CEO, Greg King, to talk anything and everything Bitcoin. This was a really interesting conversation, and I hope you enjoy this one as much as JC did.
So we're here today with Greg King. Greg and I, last time we each had dinner in New York City, which seems like so long ago, we were fortunate enough to have dinner together. Wasn't that delicious?
Yeah, I think it was right before COVID, and it's a fond and distant memory at this point. It's good to be here, JC.
I can't wait to do it again. First of all, if I recall, we were at the New York Stock Exchange and it was like free booze and snacks, and then we go out to dinner. Like, that was fantastic. That was like a Tuesday.
Yeah. The good old days, man. The good old days.
Oh man. So it was interesting because you guys were, I think you were ringing the bell, right? We rang the closing bell on that particular day in the New York Stock Exchange, and that was for Rex shares, correct?
Yeah. That would have been for one of our Rex shares products. Don't recall which one, honestly, but yeah, we love to get down there. The folks at the New York Stock Exchange are great. And you know, it's if you haven't been down there recently, and you know, I guess once Corona's over and done with, the whole place has been remodeled. It's a really awesome place to tour and have client events. So I think that's where we hung out last time.
That room that used to have the big table is such a beautiful room. There's so much detail. I love all that architecture stuff. We're there talking about Rex shares. Now, fast forward a year, basically, and I am a founding investor in your new company, OSPREY Funds, which just launched the Bitcoin Trust. So first of all, thank you for letting me in on that round. And why don't you, tell everybody what it's all about? What's up with yourself?
Yeah, sure. No, happy to have you on board, and a number of other folks who are high value add. So what we did is about 4 years ago, through the parent company of Osprey, Rex Shares, we filed for a Bitcoin ETF. Well, 4 years ago, we started working on it. 3 years ago, we filed for a Bitcoin ETF. And that's because 8 years ago, I bought my first Bitcoin. And so I was kind of watching the space. You may recall the Winklevoss twins were the first to file in 2013. Yes, that long ago. And so people were already talking about a potential Bitcoin ETF back then. I wasn't really taking it that seriously because being an ETF guy, I knew how much wood there was to chop to get something done. But fast forward from then 3 years to 2016, at that point, Bitcoin had been deemed a commodity by the US regulators. So we started to dabble and really do the research of how to bring a product to market. Ultimately, though, the SEC was not comfortable with ours or anybody else's, and they still aren't to this day. It's February of 2021 at this point, and no dice for anyone looking to launch a Bitcoin ETF. So what we did 2018 and 19 was really to kind of get practical. And what we decided to do was pursue this trust structure that we've launched under the name Osprey. So we set up a subsidiary company called OSPREY Funds that's digital asset investments only. We're actually in the process of spinning that out as a standalone company. But the first fund we have is the Bitcoin Trust, and it's trading under the ticker OBTC, and we've got a lot of cool things planned.
So for me, it's really interesting for investors around the world to have, exposure into cryptocurrencies, and it's really hard to do. I get emails all the time. JC, what do you recommend? And I don't like recommending brokers. We don't do that, or wallets. I'll tell people what I'm using and things like that. But this allows investors to get exposure in all sorts of new vehicles, tax deferred stuff. You want to talk a little bit about that?
Yeah, sure. So people ask us, why are we creating this fund? Because if you want Bitcoin, you could just go buy some on Coinbase or anywhere on one of these exchanges. And it's a decent question, but I draw the analogy to gold, right? So if you want exposure to gold, you got a couple of options. You can run out and buy some gold coins, stick them in a shoebox, bury them in your backyard, whatever you want to do. And that's fine. And in fact, I have some, not very many, so don't come, breaking into my house, but I do have some. the thing is, not everybody wants exposure that way. It's a bit of a hassle. If you imagine if you have a large amount of dollars to invest, that may not be the most efficient. And then finally, it's really the location of your assets that's important here. So if you think about your mainstream investor in the U.S., the bulk of your assets for retirement are going to be saved in your brokerage account, in your IRA, that kind of thing. And so a fund is really the only way to get access there. You're not going to really be able to tap into these crypto exchanges. You're definitely not going to be able to use your IRA or your brokerage typically for most investors to get access to physical cryptos. So this just is a package of convenience, frankly. And it's the mode of consumption that most investors are used to as it relates to their brokerage and retirement assets. So that's all we're doing really is repackaging it in a way that's value added in terms of convenience, and we try to do so at the lowest possible price. It's a much less expensive option than the other fund that's been dominating the space.
I'm fascinated by the whole thing because as technicians, what are we doing? We're analyzing the behavior of the market and therefore market participants. And all of these vehicles allow for more and more participants to get exposure into new areas. And it's fascinating. You saw it in GLD, with gold many years ago, and that turned into a big fund. Like you said, a very convenient way for investors to get exposure. So I think that's just really cool. And it gives us other liquid alternatives to analyze as technicians. We have all kinds of charts. People are like, well, do you analyze the ETF or do you analyze the futures contract? And the answer is both, right? JC, when you look at countries around the world, do you analyze them in local currency or do you analyze them in dollars? The answer is both, right? So you really want to get multiple perspectives. Now, in terms of Bitcoin and gold, I get a lot of commentary that the fact that gold is doing so poorly is because now there's another alternative to fiat in crypto. I'm personally not convinced that it's the only reason gold is terrible. I think there are many other factors out there. I think the fact that Bitcoin and cryptocurrencies exist obviously doesn't help gold, but I don't think that that's the driver. I want to hear it from you. What's going on out there?
In terms of the gold price, I do think that the dollars being attracted to the crypto space have taken away from the natural buyers of gold. However, I agree with you. Like it's definitely not the only reason for that. You've got a bunch of things happening with interest rates. We know those have taken a run up lately, and real interest rates have gone up. So that's not going to be great for gold, right? It's a non-yielding asset. But in the long term, I'm of the view, and I started off as I may have mentioned, a gold investor. That's how I found Bitcoin in the first place. Was really looking for stores of value. So I'm a gold believer. But ultimately, Bitcoin does compete with gold in several categories, and in a number of them, it's actually better. I try sending $1 million of gold coins around the world in 5 minutes. It doesn't work. So there are aspects of Bitcoin that are superior to gold. That, on par, I think it's a good alternative. But the world's going digital, and I can definitely see a future where the people, let's call it beneath us in terms of the generations, view Bitcoin as a superior alternative to gold, and gold perhaps being considered, a more ancient relic. I think gold will always have a place. We all know central banks and governments value it highly, but Bitcoin is giving it a run for its money, and I think there's a long way to go there.
At what market cap can we no longer say it's not making an impact? At what market cap, at what level can we say crypto's here and maybe severe losses in the crypto space can have systemic risk into other asset classes, like bonds, commodities, even gold and stocks? At what point can it be in that category? What's the number?
You mean the number for the overall market cap of crypto?
That's what I'm thinking. Or Bitcoin, like at what point is there real systemic impact?
Yeah, it's a good question. So you've got a roughly trillion dollar market cap on Bitcoin at the moment, and that's a big number, but it's still only a fraction of the value of Apple, for example, which is only one of the stocks in the S&P 500. So you start to do the math there in terms of the size of crypto versus the size of the stock market. Vis-a-vis gold, it's on the order of 10 to 1. Gold is still roughly 10 times the size of Bitcoin. I think that the thing about Bitcoin is it captures a lot of the marginal flows right now. So it could have a disproportionate impact. But, to me, a threshold number is whenever, if this happens, whenever gold and Bitcoin are kind of on par. So, whether gold shrinks and Bitcoin grows, or whether they both grow, just Bitcoin grows faster. Whenever we get to the point where Bitcoin and gold are roughly the same size, I think at that point, Bitcoin is a significant influence on, global economics, and that would cascade through to interest rates, which affects the stock market, et cetera.
So then we're talking, what's that number? Is it like 7 trillion or something like that? 8 trillion?
Well, again, it sort of depends. Like you could have them, Bitcoin could go from 1 to 5 and gold could go from 10 to 5, right? Because the gold price is cut in half and Bitcoin price quintuples. Or gold could grow from 10 to 12 and Bitcoin could grow from 1 to 12. And, so it's sort of, I'm kind of more speaking on a relative basis when they're 1 to 1 versus when they're 10 to 1. So multiple paths to get to that point. But if you seem to want a number, so how about 10 trillion?
That's a great answer. It's the best answer I've heard. I ask that question a lot to smart people that know about crypto, because that's just, I can tell you about the prices and I can analyze that all day long. But in terms of the mechanics and, this type of stuff, I mean, you're the expert. So I'm curious, but I got to tell you, kudos to you. That's the best answer I've heard. Usually they ignore the answer. So I appreciate that, but I don't want to cut you off. You were going to give me a number.
Yeah, I was just going to throw out there 10 trillion, right? If you just sort of assume, gold on a relative basis to Bitcoin, let's face it, lately, it's pretty darn boring. It's been a little bit more exciting the last year or so than it had been in a long time, but still, it barely moves when you compare it to Bitcoin. So I'm just going to assume it's flatlining, and I believe that Bitcoin at some point will catch up. So we'll just go when gold is 10 trillion and Bitcoin is 10 trillion. I think that that would be a kind of a milestone for the space, and certainly a scenario where Bitcoin's movements are influencing global markets in a very big way.
So we're talking $500,000 Bitcoin. It becomes systemic.
Yeah, I guess we would be. Yep.
That's
somewhere
cool.
in there.
That's cool. I mean, I was throwing numbers like 1 million, not with any sort of analysis whatsoever, just because it's a nice, pretty round number. But the way you mention it, 500,000 looks like that, like a more solid number. So that's cool. Talk to me about institutional flow. I've always been in the camp that, from my seat, I see the institutions investing in the Pixes and Axes, right? Sort of the infrastructure around the crypto space rather than in the currency itself is sort of my experience. Can you give some color on that?
Well, I mean, so we have seen a huge number. Well, I shouldn't say a huge number. What we have seen is a really interesting set of developments in the institutional side the last, call it 6 months. So what do I mean by that? People have been talking about institutions coming into crypto. And one of the reasons that everyone cares is because that's what the big dollars are, right? And if you think about Bitcoin, remind me your question, because I'm going to go off on a tangent here for a second. What happened with Bitcoin is it's upside down, right? Stocks don't come to market the same way Bitcoin did. Nothing comes to market the same way Bitcoin did. What do I mean? I mean that a stock starts off as a startup and then gets venture capital. So that's institution number one. Then gets private equity. That's institution number two. Then the investment banks, institution number three, underwrite it. And then it goes and gets bought up by all the hedge funds, institution number four. Then the mutual funds. And by the time the retail guy hears about this hot stock, it's pretty overpriced and post IPO. Bitcoin is absolutely the other way around. It started off with a couple techie guys sending each other 10,000 Bitcoin for 2 pizzas, right? Talk about your regrettable, things you've done that you regret. So that's how Bitcoin started off. And I think that that is why everybody's focused on when are the institutions coming. So back to your question, the institutions that came online in the last year or so are really interesting. Before, you had institutional investment coming from family offices, endowments, hedge funds, and that's great. But those tend to be the early adopters. What you've seen more recently is a couple new categories coming online, and it's not a ton of actual investment yet, but it is representative of these whole and new categories of institutions. So what I mean, Tesla, obviously. Tesla, we should give credit where credit's due. It's the guy over at MicroStrategy who kind of went all in on Bitcoin. But the point being, that's a publicly traded company putting Bitcoin on its balance sheet. So then you saw Tesla, follow suit. You've seen Square do some things, and that's who are we talking about? We're talking about a few very aggressive, forward-thinking CEOs. What happens when that carries through to like the boring kind of Fortune 500 companies, and you have somebody like John Deere making an investment? I just picked them at random, or Raytheon or something. Those people haven't even mentioned it yet. They're probably starting to think about it, and then 2 years from now they'll make an announcement. But by that time it'll be commonplace. So
especially when they hear you busting their chops on the podcast,
Yeah, right. So those guys are interesting. And another type that's come in that represents a whole category is insurance companies. We saw $100 million investment from Mass Mutual. That is an old line, Massachusetts firm that typically would be last to the party on something like this. They've dipped a toe. So what if all insurance companies start taking a look and taking this seriously? The third category that we follow in particular is mutual fund managers. So mutual fund managers have a lot of regulation around them, and you saw Guggenheim and you saw Bill Miller specifically asking the SEC in certain filings to be allowed to invest in Bitcoin. And by the way, they would do so via a Bitcoin trust rather than investing Bitcoin directly, which is a similar product to what we have at Osprey. So that's an interesting category for us for obvious reasons. So I think what you've seen with developments on the institutional side the last few months is just a broadening, and it's just getting started, really.
So that's interesting that you mentioned that the new Osprey fund is not retail focused. I was always under the impression, and one of the biggest reasons, maybe the reason why I wanted to be an investor, was because it allows for tax deferred status and stuff like that, specifically for retail investors. But now you're telling me that that's not the case. That's interesting.
Not at all. So guess what? We're available for both, and I think we're a good option for both. So the difference is you have literally hundreds of crypto funds and hedge funds that have been launched in the last few years that are not available to retail, right? They're only available to accredited investors, institutions, ultra high net worth, all that good stuff. The differentiator for us is we're also available for retail, right? So we have a retail leg of our distribution. However, we're also an institutional product. So we're both. It's just that the market has really been saturated by institutional only product that cuts out the little guy. So unless you put a ticker on it and make it mainstream, little guy who's not an accredited investor can't get access. And guess what? That's what I am. I'm a little guy, so I want it in my portfolio. I want to be able to access it online. I want all my friends and family to be able to access it. And I think that that's where the market's headed.
When's there going to be an inverse Bitcoin ETF?
Oh man. You can't do that without using the futures market. And so I think we need some time. I can tell you this right now, there will not be an inverse before there's a regular Bitcoin ETF. So
what about an inverse ETN?
Well, that poses another issue. Banks don't really trade Bitcoin, and so ETNs are issued by banks. I think an ETN is a long ways off on the Bitcoin side. But remember, inverse products are, tricky, and the product goes up, or the underlying goes up by 100% before the fund rebalances, depending on its rebalance period. that fund gets wiped out. So, you know, in other areas of the market, an inverse product can make sense. In Bitcoin, I mean, that's really sort of playing with fire. So I think it would be a while before that comes out.
You know how the kids these days love playing with fire, you know?
Yeah, yeah, they do.
For me, it's more like, you know, the more opportunities for investors to take the other side of things, the more real that asset becomes, in my opinion. And, you know, the more bullish it is, really, because those short sellers are natural buyers. That's the only way to unwind that position. So not only do I think it makes it a more real asset, I think it's a positive catalyst for the asset, whatever it might be, Bitcoin or otherwise, no?
Yeah, no, I agree with you generally. And, you know, what's interesting is that if you look back to the 2017 run up, where it pierced through its previous all-time high of, I think it was around 1400, and went on this run all the way up to 20,000. It's, you know what the catalyst was for that bubble to burst? I mean, I don't know if it was a catalyst, but it is coincidental. Happened within one day of each other. You know what that was?
Futures.
You got it. So people were finally able to short, and off they went, right? So I think that you're right. That kind of development is long-term bullish for any space, because it simply means the capital market side of things is getting built out. But in the short term, it can be bearish. So you know, the inverse products, though, that's a tough one. I think that would be a ways off. You know, one thing we should talk about, though, is premiums and discounts, and how these trusts trade at a premium and discount. I'm sure you have that on your list.
Premiums, huh?
They can be, yeah, for sure. And ours is trading at a large premium right now. And so, yeah, you know, investors need to be aware of that and take that into account before they buy or sell. But you know, with your head for analysis, that could be an interesting space to do some work, because these things trade around a lot. They really move a lot in terms of the premium.
If you can get me the data of the daily premium and we can plot that over time, I'd love to check that out.
Sure. Yeah, no, we can do that easily. And I think it's now available on Bloomberg, but they're still kind of loading things up. We've only been trading for 2 weeks, so not everything's 100% online, although I think it's pretty close now. But we'll follow up with you on that.
Yes, please do. I mean, listen, I have like an army of data dorks that they love getting their hands on new data and start building bubbles around it. I mean, it's just like, it's hilarious. It's like you know, like, I love this conversation, Greg. This is fantastic. You're answering all my questions and you keep giving me smart answers. So I'm just going to keep throwing them out there. Let's talk, let's talk sentiment and the community. You know, I'm just going to keep it real. Whenever I see sort of cult communities, whenever I see, you know, assets turn into religions, we've seen it in Apple in the past. We've seen it in Tesla. You see it with the gold bugs. We've seen it in the silver bugs a decade ago. They got carted off in stretchers. We never heard from them again. You know, you see it in natural gas also brings out some of the animal spirits. You know, cryptocurrencies, Bitcoin in particular, for sure. You got to throw it in that category. Is it getting frothy with the laser eyes on the Twitter and the whole thing? Like, what's up with these guys?
Yeah, I mean, it is a little frothy, but I don't know. I think it's cute. Some of it, everyone's announcing on Twitter, you know, 48,000, 49,000, 50,000. I don't really see it that way. I guess maybe I'm more of a mid to long term guy, so I tend not to focus on the minor movements on price. And I just see it as a disruptive technology. So I do think the community is right to have some excitement around that. But what it reminds me most of is really I hate to say it, but the .com bubble, right? And people were so excited about the internet, and it got ahead of itself. But they had good reason to be, right? Ultimately, I mean, where would we be without the internet? I mean, it's not even a thing anymore. People don't talk about the internet. They talk about apps on that are built on the backbone of the internet, but you don't even really talk about it anymore. It's just this base layer of connectivity that we all assume exists and will exist forever, and we just depend on it in every which way for our lives. But if you were alive at the time and focused on markets at the time, you know, everybody thought that the internet was sort of this panacea that would that would do everything. And so I see a little bit of that in crypto, but similar to the dot-com bubble, I just figure it's a viable category of technological disruption. And there's literally thousands of projects right now, but 95% of them will go away and die off. But that leaves 5 or 10% that will become the Amazons and the Googles and so forth of the crypto revolution, if you want to call it that. So, in my mind, it's probably too early to call, 99% of those, but I'd be comfortable calling Bitcoin at this point. I think Bitcoin's here to stay. Will it be the largest crypto forever? I'm not willing to say that, but I do think it will be for the next 5 or 10 years. I think Ethereum's here to stay. And then beyond that, it's kind of to be determined, at least in my book.
Listen, whichever one's going to end up being the biggest, you're going to build a trust around it, right? I mean, that's
yeah. Well, we hope so. Yeah, unless it takes us by surprise. And not just the biggest, but the main ones or the most promising ones. So we do have a significant pipeline of product that we want to roll out. So we'll be back to talk about that if you want.
Definitely. You kidding me? I love this conversation. Speaking of which, so the basically all the points you just made are the answer to why this internet currency, or as okay boomers, are like the internet currencies. Your comments right there were the answer to why these aren't tulips, right? Because there's a whole infrastructure being built around that. You couldn't do that over flour 400 years ago.
Yeah, you have to ask yourself, are these solving real world problems? Like everyone always talks about tulips. I know a little bit about what happened. I do not know that there was any significant utility to tulip bulbs in the whatever it was, 1600s or something. Bitcoin is solving a problem, and the problem is, hey, the world needs a digital store of wealth that does kind of what gold does, but in a different way. It's digital. It's able to be easily transferred cross-border, and it's secure, right? It's secure in terms of the protocol. It's secure in terms of the potential for future debasement, et cetera. Maybe the world didn't know it needed that. It had that problem and needed that solution. Similar to how Steve Jobs used to say, people don't know what they want or they need. I know what they want, and I'm going to build it for them. Maybe the world didn't know it needed that, but now I think it's waking up to the fact that, oh yeah, we did need that problem solved. Thank you very much, Bitcoin. Right. So, that's the difference between Bitcoin and tulips. It's same thing with Ethereum, but it's a different problem. The world needs a platform to execute smart contracts in trustless fashion, right? The world definitely needs that solved. And Ethereum's trying to solve that. A number of other projects are as well. But that's a separate problem from what Bitcoin's solving. And it kind of goes on from there all the way down the road with the different crypto projects and what they're trying to accomplish. So as long as you're solving real problems and adding value in that sense, it's totally different than a tulip.
I couldn't agree more. This is a technical analysis podcast, right? We analyze the behavior of the market and market participants. That's what we do every day. People listening, that's what we want to do. There is no asset in my entire career that I have seen trade this cleanly when it comes to supply and demand analysis. Like we get down pretty hot and heavy when it comes to technical analysis, but when it comes to keep it simple, stupid, the stuff they teach you on like the third day of technical analysis kindergarten, just the basic principles of supply and demand, there's no asset on earth that trades as cleanly as Bitcoin. I've never seen anything like it.
Yeah, that's amazing. I will take your word for it. I definitely don't do as much analysis as you do, but it does seem very clean in terms of analyzing supply demand imbalance and all the technicals that result from that. What is your overall view? If I can flip the script and ask you a question, what is your sort of short and long-term view based on all the analysis you're doing on Bitcoin?
Greg, I'm all in. Laser eyes, let's go, baby. All in.
All right.
No, just
all right.
furthest thing from that. No, listen, we've been bullish. I mean, the trade, just to rewind in terms of technical analysis, the entire way up in 2017 was just hitting all these Fibonacci levels, like to the penny, consolidating, breaking out, achieving its next target, even all the way at the top at the end of 2017, when all my high school buddies were texting me about not whether or not they should invest in cryptocurrencies, but specifically which ones they should be investing in, right? That's when you knew, and they were hitting Fibonacci extensions at the time. It was unbelievable. And then the bigger the crash, the longer the need for repair. We've done a lot of cycle work in Bitcoin, and the cycles are very similar to stock market and bond market and commodity market cycles, except they happen a lot quicker, in a very similar way to how, like in the 1800s, like every other year there was a panic. It was like the panic of 18, whatever, a panic of 18. So like every other year was a panic, right? Because it was a new market, right? The cycles happen faster. So it's very interesting, the similarities between a new market and cryptocurrencies, and the fact that the cycles take place quicker, but the visuals and the data representation, the data that we see, they follow the same exact patterns. And then when we peaked in 2019, we peaked at exactly the 61.8% retracement of that entire 2017 to late 2018 decline, literally to the penny, and then started to break out. So the trade was, hey, we want to buy a breakout above 10,000. And the next target is quite obviously the former highs from 2017. And where did we stop? At exactly those levels. And then consolidated for, I think it was like 3-4 weeks, and then broke out again. I mean, just clean, Greg. So yeah, I think it goes higher from a risk management standpoint. 45,000 is a big level. I think that level needs to hold. If it can, I think 70 is next. And if they break 45, I think there's downside to 30, maybe even lower. But we're bullish. As long as we're above 45, I like this to 70.
Nice. Okay. Yeah, I love hearing technical analysis, especially as it relates to Bitcoin, because it's not a company. It's not producing cash flows. It's the fundamental side is a lot more difficult, and it is driven a lot by investor psychology. And I think the technical analysis is just a reflection of herd dynamics and things like that. So I love hearing those views.
There's no doubt about it. Like you said, there aren't any fundamentals. It's driven by supply and demand. I'd argue that stocks and bonds and commodities are also driven by supply and demand, but a lot of people will argue with me there. In the case of Bitcoin, you can't argue otherwise because we don't have any other, there are no earnings. There is no company. So really, really fascinating stuff. Well, why don't you tell everybody about the fund? Like, are you allowed to do that? Like regular?
Yeah, sure.
Work.
Yeah, I can give the overview. So the fund is the Osprey Bitcoin Trust. The ticker's OBTC. As I mentioned, we started trading 2 weeks ago. We're really differentiated. The Grayscale fund has been out there for a long time. Everybody kind of knows about GBTC. We wanted to come out, give investors another option, kind of do version 2.0 in the space. So our Bitcoin fund is priced at a much lower management fee, 49 basis points. And we feel that that's more in line with what ETF-like investors are expecting. So that is one point of differentiation. The other thing that we did is when you're storing crypto, it sort of matters how you do that. And we felt that it would be valuable to come to market with a partner that everybody knows and trusts. And so we partnered with Fidelity. They are actually, I think, one of the most forward-thinking of the large asset managers and financial companies in the U.S. And they have a large crypto custody service that they've rolled out. So the Bitcoin in our trust is actually held by Fidelity and safeguarded by them in cold storage, with all the redundancies and safety protocols that you might expect. So the fund is out there. It's available. It's available in 2 ways too, which is something your audience probably should understand. Because the ETF route has been closed so far to the market and the SEC won't allow a Bitcoin ETF, what that means, what that requires us to do is essentially only offer shares direct to accredited investors and above. So if a person is accredited, it is definitely, well, I shouldn't say definitely, but in 99% of the cases, it's better to come in and purchase those shares direct from Osprey. You can do that on the website, ospreyfunds.io. And what you do is you acquire those shares at the NAV, right? After 1 year, they're dropped into brokerage account of the investor's choice and can be sold under the ticker symbol. So what you're seeing now in the market is shares that are being sold and traded around have already been through that 1 year holding period. Our fund is actually 2 years old. And so we got approval to trade the shares under the ticker just a couple of weeks ago. But new investors can come in at NAV if they're accredited, and then trade those shares in the secondary market. There may or may not be a premium at that time. Currently, there's a premium of over 150%, which is actually quite large.
Yeah.
But that may or may not be the case a year from now. But that is the most straightforward bet. The other set of investors who want to access directly just buy it in the secondary market currently. And so in that scenario, what you want to be looking at is whatever the premium is on the day you purchase it. So you want to be cognizant of that versus the fair value of the fund. Those are published on our website. Unfortunately, we can't do anything about those premiums and or discounts. It's just pure supply. Talk about supply and demand, right? And that's why it's ripe for some of your analysis. Those numbers are just driven by supply and demand because there's a fixed pool of shares outstanding until whoever bought shares a year ago drops them into their account and filters those out into the market. So it's kind of a slow growth in terms of growth of share count with these products. It's a little bit different if investors are used to ETFs. Sort of similar to closed-end funds. They may trade at a premium or a discount. We really haven't seen discounts too much except for very recently in the Grayscale product. I think it's just gotten so large. They have over 30 billion. Our fund is small though. It's just under 100 million. So we don't have that problem yet. But yeah, it's I would love to see some analysis of the secondary market dynamics. Once you put your head to it, you and your crew.
I'm telling you, these guys are animals. So you kidding me? They're like lions. Like if I throw like a steak and they all fighting over the data, like that's how. I'm not even kidding. That's exactly how it is. Another thing I wanted to mention before I let you go, Fairfield, Connecticut. I'm a graduate of Fairfield University, so I spent
nice.
4 of my favorite years of my life there in Connecticut.
Yeah. Well, come up and pay us a visit, man. You gotta show me the town. I'm actually Californian originally, transplanted to Connecticut 15 years ago. But Fairfield here is a great town. We're right on the Post Road, and the beach is not too far away. We see lots of your, I guess, compatriots from the universities, spill out onto the streets and the restaurants and stuff in the summertime, but not so much right now in February, but in the summertime.
Yeah, I'm thinking you hang out at nicer places than the old Seagrape where we used to hang out at the dives down by the beach when I was in school. But we'll keep it real. I'll take you to my old spots, and then maybe you could take me to your nice fancy spots. How's that?
Yeah. Okay. All right. Deal.
All right, guys. Good. Greg King, everybody, go check out Osprey Funds. Really, really cool. I personally am a founding investor. I'm very excited for it. Greg, I'm rooting for you, brother. Anything I can ever do.
Thanks, man.
Let's do this again. This was awesome. I love this conversation.
Absolutely. This is a lot of fun. We'll come back when we have some more funds and some other cryptos to talk about. And maybe after you guys have, you and your horde have run the analysis. I'd love to see that.
Done. Looking forward to it. Thanks, Greg.
All right, man. Thank you.
Thanks for listening. Big shout out to Greg King for coming on to the podcast. Go check out OspreyFunds.io and their new fund, ticker symbol OBTC. Thanks for listening. See you next time.